Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Wednesday morning. Equities are trading lower. As you can see, all four of the broader averages are trading below yesterday's close. So that's that previous session close, that line in the sand, that sentiment read, and we're continuing to drift lower. One of the questions I've been getting is this a downtrend, right? Rog, are we in a bearish market? Are we in a downtrend? I'm not as concerned about whether or not we're in a bullish or bearish market. Those are usually things that folks will, if you're watching television, they'll look at previous highs, how far from those highs, from a percentage basis are we? I'm much more interested in structure. So that's a great question. What trend are we in? And this is definitely chop. I would consider this mildly bearish chop because the current candles show not only bearish price action, but participation to the downside. And this is a heavy environment. There's a lot of uncertainty, but this is definitely not a downtrend. Let's look at where we are in a bigger picture, right? Let's look at the last 12 months. This is always a really good way to sort of balance the psychology of, a lot of times the hyperbole and the exaggeration and frankly, the straight up fear mongering that can happen versus where are we really? This is, as you can see here, March to March. We're looking at 1 year. It's hard for me to look at this chart and panic, right? If my perspective is looking down from the highs, yeah, it's a drop. But if my perspective is the last 12 months and looking up from the lows, and I'm still trading above what I like to call the equator, which are these white dots, hard to call this really bearish. We're down from the highs, which really only matter to two groups of people. Folks who sort of look at a high watermark of their trading account, of their investment account, and say, hey, I'm down from what I thought was real money. Gang, it's unrealized profit. Just like the losses can be unrealized on pullbacks, those profits are unrealized as well. The other group are the folks who buy at the highs. My gosh, don't be one of those. Those folks, yeah, I guess there's a reason for them to cry. So, it depends on the perspective. I've talked a lot in the room. There are some great clips on YouTube by a fella named Andrew Bustamante, and he talks about the difference of perspective versus perception. Right? Perspective. So rather than me get into that, too early to get philosophical. My coffee hasn't even really kicked in yet. Go check that out. And we need to understand the difference between the two when we are trading. But yes, we're down, right? We're down. The thing that I get a lot of is, Rog, I've been following your videos. I've been following the recaps you send out from the Sector Secrets Mastery. You talk a lot about being bullish. Well, where are you bullish? How is it that you're finding trades in an environment where it looks like so much fear and uncertainty and weakness is sitting in? And I always remind my traders in the mastery that flow, right, money, never goes under the mattress. It never just goes off into the sidelines, not to be put to work. If there's weakness in one corner of the broader averages or the sectors or what have you, asset classes, something else is benefiting. Money just doesn't sit on the sidelines staring at the game. It's going to get put somewhere. And our job is to find where that somewhere is, because uptrends are, if for no other reason, the easiest type of market behavior to trade for the vast majority of traders. So my job is always to be an uptrend seeking trader. Right? Are there places where we can be bearish? Oh, gosh, yeah. I think a couple places that we've been talking about pretty consistently in the mastery for those traders who want to say, Rog, I get it. You like your long calls. I do, unapologetically a bull. But if you take a look at things like Tesla, getting long puts in Tesla in a downtrend with the red candles in the gold zone, there you go. Automated setup, right? Completely automated. And then if you want another layer of understanding, I did a whole video on this yesterday, and thanks to everyone who watched and left a comment. The way in which I can understand where the flow is. What's flow? Flow is money, and where money goes, that's attention. And then whose attention? I'm not really concerned about differentiating retail attention versus institutional attention, big money versus small money. I just want to know where the attention is at based on volume, right? Who is paying attention to different levels based on the fact that they're either long or short from that level. And if you don't know how to do that, it's really easy. You want to know where the big money is? You want to know what the institutions are? You know what? You want to even forget all the who of it. You want to know where the attention is? Take a look at price-based volume. And I went into a total how-to to do that using TradingView in last night's free video. If you want to get a good idea of how to understand that flow, check out that video. You can do it on TradingView. You can do it on a number of platforms, I believe mostly for free, by using something called volume profiles. If you want even more depth to the understanding of where that resistance and support might be based on volume, check that out. I'm going to use volume. I'm going to use volatility, price, and time. And when it comes to time, we have to think about something else. Yesterday, we had a hot zone at 9 p.m. Today, we're going to have a few more smaller, more minor data releases. But this Friday is probably the second biggest event. And from a macroeconomic standpoint, the most important event of the week. And it's the tag team of not just the non-farm payroll at 8:30 a.m. Eastern, but also, I believe it's at noon or 12:30. I'll double check. You can find it on any economic calendar. Jerome Powell speaking on Friday. So for as much as a lot of traders are worried about geopolitics and politics and tariffs and whatnot, frankly, the only macro that matters, the macro that eclipses them all, is whether or not the Federal Reserve is still open to cutting this year. The data says they are. The Fed Fund Future says, yes, we're going to get 1 to 2 more rate cuts this year. And when we get them, how soon we get them, how long we might pause at these lower levels are going to be different things that we can discern from events like Jerome Powell speaking, especially since he'll be speaking 3-4 hours after non-farm, after the biggest jobs number we get. Remember, the Federal Reserve has a dual mandate. They're not only watching and trying to manage that inflation metric that they use the PCE for, they also have a second mandate, which is, all right, we can do what we need to do to keep inflation under control at our target, but we can't kill the employment picture at the same time. We can't do that. All right, so with that being said, there are downtrends out there. There are uptrends out there, fewer and fewer, but there are places where we can find opportunity. And that's just the job, gang. Our job is not to analyze from the perspective of where we're going to be in 12 months or where we're going to be in the end of Q1 or where we're going to be in some distant future or even near-term future. That is not the job. Prediction is not trading. And it's funny because the more I trade, the more I see traders have deluded themselves in many ways to their disadvantage into thinking we have to see the future. Guess what, gang? For 35 and a half years, my crystal ball has been in the shop. I have no idea what's going to happen tomorrow. What we can base our risk management and expectations on is what's most likely, what's probable. And downtrends tend to keep heading lower. Case in point, Tesla. Why on earth buy something in a downtrend? We don't hate our money. And buy, if I'm going to be looking for follow through to the upside, find an uptrend. You want a really easy tip to help account growth, consistent account growth, right? 3 of my favorite words. Find trends. Don't trade chop. Don't trade consolidation, waiting for it to break out. Trade things that are already doing the thing, whether that's moving higher or moving lower that you want. And then in the case of a downtrend, yesterday we had a really cool, I think Bot is in this trade. Bot said, hey, I might look at that long put in Tesla from yesterday. Look at what Bot's waking up to using the daily price movement ranges, a downtrend and a red candle in the gold zone. Why on earth buy this? Momo traders get sucked up into this. Oh my gosh, we're getting, here's the bullish momentum. Let's get some. It's a downtrend, right? It's a downtrend. So I think Charlie Munger, I believe it was Charlie Munger, who had a great quote, I think it was him, on crystal balls, right? This whole idea of telling the future, which, by the way, you turn on television, all those geniuses can tell you where we're going to be in a year, right? Good luck with that. But he said, anytime you're dealing with a crystal ball, you get a mouthful of broken glass. And I think that is very, very true. All right. So let's see what else is going on here. I have been keeping an eye on bonds. Let's jump on over to the ZB. And the uptrend in bonds, by the way, what does the uptrend in bonds mean? So when bonds are heading lower, that actually means yields are going higher. When the bond market is going higher, that means yields are going lower. So it's inverse to the actual yield of the long bond. Couple things I know are in the way. We're still below the equator, getting through this area right around, I'll tell you right now, right around 118, almost 119, the 119 handle. We're having a difficult time. Bonds are having a difficult time getting above that level. However, as long as we don't expect bonds to break 119, as long as we don't expect to have to see that to take our first target, it's a pretty good opportunity to buy a dip in bonds if price gets down to about 117. Now, that could be through bond futures, that could be through calls on the bond futures, and that could be through TLT calls. I'll be waiting for lower lows to do that. By the way, that did happen yesterday. It happened on the 2nd, it happened on the 3rd, and you can see there's some nice follow through off those levels. It's a little early. It's probably a little aggro to be dealing with bonds, but it is an uptrend. It does have the green candles, which mean bullish price action and bullish participation. All right. What else do we have here? Let's jump on over to, we have crude oil inventories today. And if I'm taking a look at crude oil inventories, look, crude is in a downtrend. Let's just keep that in mind. There is little to no reason to focus on the long side of the longer term, the daily time frame of crude. If I see all the red candles moving lower, as we can see here, the goal is much like Tesla, right? Red candle, gold zone, long puts when that happens. Again, there are plenty of opportunities to get long puts. There are plenty of bearish setups in this environment. Another one would be, we talked about Tesla. What about Amazon? That's the other stock in the consumer discretionary. It too is heading lower. It's not in a downtrend, but take a look at the red candles. And, if someone were to ask me, Rog, if you had to look at Amazon to the downside or Tesla to the downside, which would it be? And this is that trade this, not that. I would focus on Tesla. Not because Amazon isn't bearish, but because Tesla is a better version of bearishness. Rather than just the red candles and bearish momentum, Tesla has also the downtrend. So make sure we're always thinking about whatever your tools that you're using are, how do you differentiate something that's got a lot of bearish momentum versus something that's actually in a downtrend. All right, so let's go take a look at what else we've got going on here. A lot of folks have been interested in gold again. Me too. We've traded gold actively throughout February. And yes, I would love to get another opportunity to buy gold. However, unlike the February trades where gold futures were in an uptrend, you can see here that gold's certainly bullish. It just doesn't have the uptrend any longer. And while I don't mind to trade bullish chop, my expectations to find gold above, say, 2970 or lower. But look, if I buy a pullback to say 2900, 2970 is a great trade. In fact, I would probably look at initial target somewhere around 2938. Definitely on the radar, definitely something I'd like to do. And that's buying a pullback where the green candles in the gray zone. That gray zone, by the way, I did this whole breakdown of volatility. So a lot of folks are wondering, Rog, where is that big money? Where are the traders who are moving size? Where is that? And the only way to understand size is through volume, right? That's it. A lot of folks will use terms like floors and ceilings, buying and selling, or buyers and sellers, support and resistance, supply and demand. All those words mean the same thing, right? Resistance, ceiling, sellers, and supply are all the same thing. Just like buyers and floors and support and demand are all the same thing. This is where traders have to understand, and this is what I'm hoping that you might look at your own tools and say, how is the zone being calculated? What is the actual data that's being calculated to say this is what that price level or that zone represents? In the case of volatility, I'm going to look back at historical volatility. I'm not going to look back on, 7 days or 14 days. That's not enough information. The information we have, each one of these, and Bot, you would probably know, hundreds of data points are being calculated to understand where this gold and gray zone, more than I want to be troubled with, especially to do manually and in real time on dozens of symbols. So we automate it. And what we do is we look back at historical volatility, say, hey, what is typically the range for gold? What is typically the range for the S&P? What is typically the range for whatever we're looking at? And then we can say the gold zone is resistance based on volatility, while the gray zone is support based on volatility. So whatever we're looking at, price levels, if I look at the Darvis, what is that based upon? Price, right? If I take a look at the DPMRs, volatility. If I take a look at a V-score or an anchored VWAP, that's volume, right? These are all things that we have to understand which one of the four factors we're dealing with. And I try to put as many of them to work. It should work out pretty well for this case, which is, I love the fact that my secret squiggle, which uses, it's a variation. This is most definitely inspired by a slow stochastic, but I found the slow stochastic data, what's being crunched in a traditional slow stochastic, which is just price, found that incomplete. So we added a few other factors, and now we have the secret squiggle, which is just an evolution of what I really always wanted my slow stochastic to tell me: participation and price. It's still above the midline, which means we're still bullish, right? Being above that midline is still bullish. And if that bullishness then translates to what I would like to do on the chart, when price gets down into this volatility zone, that's where I'll get long gold, micro gold, gold futures, options on gold futures, or probably the most accessible for most traders are the options on GLD. So these are all things that we're looking at going forward. All right. The next thing that I want to take a look at here is, as we're kind of winding down, is taking a look at what sectors at the moment are, let's open this up, are basically still the strongest sectors. So if I look back on a 1 month normalized performance, it's always a relative performance scan. Take a look at what's sitting near the top. Staples, right? There's a reason we've been in things like Coke and the XLP itself. After that is insurance, probably a sector, an industry that a lot of traders aren't watching, KIE. Keep an eye on that. You got your insurance names in there. There's the gold miners. If gold is strong, gold miners should benefit from that. Much like if crude were strong, crude oil stocks would benefit from that. You'll see healthcare is up there. The two positions that I have going into today are long positions in Johnson & Johnson and in healthcare, XLV. Don't know how much longer the healthcare and Johnson & Johnson can ignore what's happening in the broader averages, but for now they are absolutely ignoring it. Those are the last two open positions I have. We had 6 open trades, 6 winners we'd scaled out of as of Monday. And then yesterday we closed out 4 of those positions as we saw the profit, and then we had our protective stops in place. So all we were risking is unrealized gains, not capital. And then the only 2 that survived what was a crazy session yesterday. That seems to be almost like a skipping record. Every session seems to be quite volatile by way of back and forth. It feels like we're going through a whole week in a single trading session, but Johnson & Johnson and healthcare maintain some support, some buying support, some demand very effectively. So that's another symbol, 2 symbols that we have open in the Sector Secrets Mastery going into today. If you did not check out the video on volume, again, it is an 11-minute deep dive explainer on how to use volume to understand that flow, to understand that size, to understand, where that quote unquote big money is at. And if you haven't yet started to use volume in your trading, please do. It supplements every type of style. And especially in an environment of so much confusion, it's good to know where that size is sitting. It's good to know where the volume and, frankly, the volatility are sitting. And that's really what I'm going to continue to do as we go into today's session, go into Friday's non-farm payroll, and then hearing from Jerome Powell. I think it's around lunchtime on Friday. All right, gang, that's a wrap. As always, thanks so much for being here for Charts and Coffee. I'll see you tomorrow. Same time, same station.